Hello, I'm Richard Murphy, and this is one of a series of videos that I'm making on why we should be taxing multi-millionaires more. And I believe we should be, because there is a massive problem with inequality in the UK. We don't need the money that multi-millionaires pay to provide public services, because all public services are paid for out of government created money. But we do need to tackle inequality in the UK tax system, because inequality undermines society, and inequality also causes resentment within society at a tax system which is biased towards the rich, which is what we have. The result of that bias is that people resent the tax system, and therefore it is undermined through tax avoidance and tax evasion. And it's vital that we ensure that the tax system is complied with, so that the government can defeat inequality, can deliver its fiscal policy, can enforce the rule of law, and can ensure that the tax system is used to deliver social justice. All these things being critical to its overall economic and social policy. Now, one of the big ways in which the rich can save tax is by diverting their income from their own names into companies that they own. It's commonplace. There are over 4 million companies in the UK. Very large numbers of those are owned by wealthy people, and quite a significant number, I don't know how many precisely, because no one does, quite a significant number will be used by the wealthy to divert income that could be recorded in their own names, arising from the work that they undertake, for example, consulting and other types of activity, which they leave in those companies that they own to pay tax at only 19% at the current rate of corporation tax, compared to the 40 or 45% that they will probably be paying if they receive that income in their own hands. You can immediately see that there is an enormous tax advantage to a wealthy person who does not need to live on all the income that they earn. By transferring it into a company, they also avoid national insurance charges at present by doing that. So the consequence is that they basically can accumulate wealth at a lower rate of tax than can those who have to work for a living and who have to spend what they earn to live on, and that their wealth therefore accumulates because of the lower tax rate at a faster overall rate than does that of other people in society. In other words, the tax system is designed to make the wealthy wealthier faster than everyone else, and that is unfair. How can we deal with that is the question, because I am only interested in naming a problem if there is a solution to that problem. Otherwise, I'm just moaning. And I'm not moaning here. We can solve this problem. We can do it very simply. We did have in UK company law and UK tax law a type of arrangement where we could deem a company to be called a close company. This law actually does still exist, although it's hardly used. A close company is a company that is owned by what is called 5 or fewer participators. Participator is an odd legal word used in this tax, and it basically means people who are unrelated to each other. So, for example, my wife and I are one participator. So, by the way, me and my son, and me and my dad, well, if my dad was still alive, that is, we are all one participator. So we're looking at 5 independent people. And if a company is controlled by fewer than 5 independent people, and the rules are quite complex, go and look them up if you want to, but I've given you the outline. If it's owned by 5 or fewer participators, then it's basically deemed to be a company run for private benefit by those people. What is the consequence? Well, the consequence was that the company was required to basically pay a dividend out of the profits it made to those owners, so that they would pay income tax on that profit. And the arrangement I've just described, where the profit could be left in the company to accumulate tax-free and therefore give the wealthy the advantage of their wealth increasing faster than everybody else, was defeated. The money was forced to move into private hands. If they didn't pay a dividend to move the profits out of the company into the hands of the owners, then the company was instead forced to pay an additional rate of tax, as if it had paid that dividend out, and therefore the bill was settled either way. Now, is that possible to do? Well, we did it for a long time. This rule existed well into the time that I had my tax career running. So in that case, why can't we do it now? There is no reason why we can't do it now. We could actually force people to simply pay out the income that they earn through limited companies into their own hands so that income taxes are paid. It's my suggestion that the rule on closed companies should be revived. We should have this, and therefore companies should be required to pay out dividends unless they can demonstrate that they need to keep the money for sound business purposes. For example, they are really genuinely reinvesting that money within a couple of years in new plant and equipment or growth of their business, in which case they can make the claim to the revenue to defer this tax charge so long as in due course they can evidence that they've actually used the money in that way, or if they can demonstrate some other business purpose for retaining it. For example, they're going to buy another company. Now, those are valid reasons for retaining money in a company, which I'm not going to try to undermine by this charge. But what I am seeking to tackle is tax avoidance through this mechanism, which is by far the most common reason for which money is left accumulating in companies in this way. And we can do it. Why shouldn't we do it? There is no reason why we shouldn't do it. When could we do it? Well, the next available budget, because basically the rules that exist could be really reintroduced. This is not a legal or technical challenge. The arrangements are known about, they exist. They can't be therefore challenged in the sense that they're a completely new tax law. Therefore, I believe we need to do this now. Oh, and by the way, of course, I do add one other thing. I have mentioned in previous videos that if there is a distribution by a company to its members by way of dividend, they should be subject to an investment income surcharge. Well, all the tax charges that should arise as a consequence of this rule of either forcing the dividends out of companies to the owners or the company having to pay a tax charge instead should also be subject to an investment income surcharge to make sure that we've got a level playing field yet again. That's everything that I'm talking about in this series of videos, creating a level playing field so that the wealthy pay tax at the same rate as everyone else in society. And why shouldn't they? Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.